The last thing I heard before I came here this morning was a prediction by some of the analysts on television that in about 1 month, we can expect that there will be an increase in interest rates on mortgages and home loans. And everybody that I've talked to really believes that this change that you have made in the federal funds rate is what's going to trigger that. Is that true, or did you give any thought to this? How can you guarantee that it won't?
Congressman, it's not the federal funds rate that we raised. It was the discount rate.
The discount rate,
which
okay.
Which is the rate at which we lend on a special overnight basis to banks. We cut that very low because of the financial crisis. We want to make sure that banks had access to lots of liquidity in case there was a run on the banks. Now that there's easy access to private markets, they don't need that kind of help anymore. So we've just slightly reduced the subsidy we're giving to banks. It has nothing to do with the federal funds rate or with the overall stance of monetary policy. It has to do with normalizing our extraordinary support for the banks and the financial markets. But we don't anticipate that action having any implications.
Well, let us be clear. The change that you have made, no matter how slight it is at the discount rate, will increase the amount that they have to pay for their loans. Is that right, the banks?
Well, it's a very small amount in terms of the amount that they borrow.
Yeah, it is. I understand that. But what I'm trying to understand is there a connection between the increase in the amount of money that they have to pay and household interest rates?
I don't think there's any material.
Can you assure us that that will not happen?
I think it's extremely unlikely, and if it were to happen, we'd look at it. But I don't think there's any connection.
Well, but what I'm worried about is you still have a lot of mortgages out there, adjustable rate mortgages, with 3% margins on them. And if, in fact, this is going to trigger an increase, we're going to have more foreclosures because the interest rates are going to be higher. That's what I'm worried about. And the predictions are that we have not seen the end to these foreclosures, that with the exotic loans that were extended, people are going to be more at risk. I don't want to see the interest rates increase on these adjustable rate mortgages.
There's no linkage between adjustable rate mortgages and the discount rate. It's linked to the federal funds rate, which we have said we anticipate will be at an unusually low level for an extended period.
Well, I want to be clear for this committee that the actions that you have taken have no connection to the possibility of an increase in the household interest rates. We don't have to worry about that. Is that right?
The reason we took the action was, again, to reduce the subsidy that we're giving to a small number of banks.
I know when you reduce the subsidy, that means they got to pay more money. Is that right?
I don't think there'll be any effect on consumers.
I beg your pardon?
I do not expect any effect whatsoever.
You don't expect them to pass on that cost to the consumer?
No, because it's very small, and I don't think it will affect it.